Hey guys, what's up? This is Andrew for TRENDLINES.com, and I'm here to make a huge update on Gamestop. Let's get into it. Alright guys, so let's start on the 4 hours time frame. As usual, let me quickly sum up what I was saying in my previous video. So I made my last video here around the 160 level, and I was telling you that we got rejected by this downward sloping trend line that was the basis of a triangle that actually never happened because it was broken here. You guys maybe remember this if you watch my previous video. So it was support. It acted then as resistance. Let's zoom in quickly here. Let's see what happened. It was here support, broken, then acted as resistance, got rejected, and then we went higher. And you can see, guys, so once again, I don't want to make anything that is not clean. I connect this low and this low here. So this one is almost touched, but it's fine. And here you can see that it's actually acted almost here as the support we had on Tuesday's session. So it was just a small thing I wanted to show you, because once you spot support or resistance, then it lasts usually a couple of days and it is useful for day trading. So whatever, here, if I take a step back, we are exactly in my scenario, guys. So it looks very good to me. We are doing the third wave, so I'm expecting this third wave to go to the 195 level, then get rejected. We basically now are trading above this, very important pivot point that I'm talking about in every video I make on Gamestop. So here you can see we traded above on a 4 hours time frame. We confirmed. Then we had a small, breakout that got supported here, as you can see, by this upward sloping trend line. That was the basis of my triangle. And we basically are still trading above 173, which is for me the major level. And on the daily time frame, we just got the confirmation, guys. So it doesn't mean that, we're going to remain bullish. It is just one more indicator that is telling us that my preferred scenario remains the preferred scenario. It's just one more thing to add to the whole analysis. So here, let me go back on the 4 hours time frame. So this is very good. So we are heading to the 195 level, and then I expect it, so as I said, to correct to the 173 one more time. This would be my fourth wave, and then to make a fifth wave and break this resistance, guys. That is for me the most important one. Let me put it in red. Let me put it bigger. We need to break this, guys. All right, I connect this high and this high. Once again, guys, I'm on a log scale. I had some of you asking me, how do you come up with those levels by connecting this high and this high? Guys, log scale. All right, if I'm not on a log scale, then it is giving me different signals that can be valid. That can be valid as well. You can do your charts like this. You just need to basically stay consistent and to see where you have the best signals. On a chart like Gamestop, guys, where basically we go from 45 to 400 in a couple of days, I don't like to use arithmetical scales. I don't like it because it is not reflecting the reality. The reality is happening in terms of returns. It's not absolute values. When Gamestop is at 300, it can go higher or lower by 100 points much easier than when it is at 2. So this is what log scale is showing you. It is showing you that the higher the price action is, the more it can move on your chart. So I come back here. So I expect, something like this, guys. Okay. So for me, this didn't happen. All right. It didn't happen yet. And we need this to happen so that we have nothing else that is actually stopping the price action to go higher, just technically speaking. One more thing I wanted to show you guys is this on the daily time frame. We just had the MACD turning positive. So once again, guys, this alone is not enough to enter a trade. But, you can see here, we had this kind of fake signal given by the MACD on the 28th of April. It was here. Same thing when we broke the 173 level. Let me zoom in. You see here the MACD turned positive on the 28th of April. It was this day. So exactly the same thing, guys. When we confirmed, here we confirmed the breakout. and still we got rejected. So once again, this is not enough, like I said, but it's one more information. And here, same thing is happening. But this time it's looking much better because we have completed this complex correction. Once again, guys, here I struggled a bit, but right now I see it very clearly. It's an ABC, ABC, ABC. So it's WXY correction. It's a 333. So it's a very common corrective pattern when you apply Elliott wave theory. So this was not the case here before. And what else do we have? Volumes are not with us yet. All right. So we are still missing the volumes, guys, but they're gonna come. And you see, this is one more reason that I'm using the log scale, because when you have the breakout, you have the volumes. All right. Here, if you actually use the arithmetical scale, the breakout occurred, guys, but with no volume. So you can see that this is not a breakout, that the arithmetical scale doesn't make sense, because if we have a breakout, we need to have strong volumes. And when we're going to break out this level, you're going to see the volumes. And this is going to kind of, prove my point. I'm not trying here to prove my point. I'm just explaining why the logarithmic scale is the one to use for Gamestop to me. So let's see if I'm right here. What else I wanted to show you guys? Yes, I also had some people asking me why 800. So let me explain again how I find this level. So this is my whole analysis. So just for you guys to take a step back, I'm actually having here a 1, a 2, a 3, and then maybe 4 and 5. Let's see. So let me put this purple, for example. All right. So for now, we are not thinking about 4 and 5 because, guys, if this happens, this would be a squeeze. We need to make the whole analysis again when we have the correction after the 800 level, if we have it. I'm not sure we're going to have it. I'm just, telling you that usually this is what is happening. So now why 800? So to find the highest level of my third wave, I do some fib extension application. So you measure the first wave and you apply it to the bottom of the second wave. Oh, sorry, I put it too high. Okay. So, and you come up with the 110 level. All right. So it's like, an area. Of course, it's not very precise. I like to call it the 800 area. This is why I'm talking about this level for such a long time, because it's the 1.618 fib extension level. So usually when we do a third wave, either it is as long as the first wave, especially when the first wave is so extended. So this would give me the 500. It's the one that is here, the 515 level. But guys, if we go to 515, what would happen? We know that already. We know all the call options that we have on the 800 strike. We know that a lot of hedge funds put a stop loss just above the maximum level we had here at 480. So if we go to 515, it's going to blow up on the upside. So this is the reason why I don't think the 1-to-1 ratio would actually occur between this third wave in purple and the first wave in purple I have here. I think we're going to go to the next fib extension level, which is the 1.618, which is the 800 level. So yeah, I hope I managed to explain this clearly. And one more thing, guys, let me show you the financial data. So why I actually think that if we go above 500, there's going to be a big move up. Is because I checked the option market, guys, and I can see that so I have here all my strikes, and I can see that the 800 strike has 2 million shares on it. The volatility of this strike is 198%, guys. So it is higher than, so this is for the July maturity, guys, and it is higher than it was 1 week ago, around 190, 193. So this is going higher. This makes the delta of the 800 strike higher as well. And you can see here, guys, this is the total synthetic short exposure, right? So we have around 500 million USD exposure on the option market, short, beared by hedge funds and market makers. And it's mostly coming from the 800 strike, guys. And if GameStop goes to 500, for example, here is the synthetic short. It goes from 500 million US dollar to 5 billion US dollars, guys. Do you imagine how much this is? So this would be unbearable for a lot of market makers and a lot of hedge funds that would need to cut their positions. So if we go to 500, we go to 800. And if we go to 800, the synthetic short is at 21%. If you add to this up right now, we have the short interest. Okay, we don't have the short interest for the 30th of April, but for the 15th of April, you know, it's like 20%. If you add the synthetic short at the 800 strike, it would be 40%. So it starts to be hard and to be hard for those hedge funds and market makers to hold their short positions. So this is why 800 is my level. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.